Good morning, everyone. I'm Vince Lancy, and this is the morning market rundown. It's Friday. It's a very auspicious Friday because it's the last day of the month, and the way things are going, gold could close a new monthly all-time high once again. There's also a very special edition because the FT has a report out, or a story out, I should say, discussing the internationalization of the RMB. China RMB usage surges to new all-time highs is essentially the gist of what they're talking about, and they make a case. We're going to comment on that extensively in context of what we believe is really going on. Next is PCE due out at 8:30 this morning. That's supposed to be a non-event. We'll tell you why it probably will be a non-event and why you should never assume something's going to be a non-event. So stay with us right now and let's get going. There's the front page. You can take a look at that while we're giving you the markets. The dollar is 101.36 unchanged. 10-year yields are 385 unchanged. SP 500 is 56.14 up 12. VIX is 15.57 down 7. Gold is 25.19 down half a buck to 75 cents. Silver 29.53 up 10 cents. Copper is 4.22 up 4 cents, over 1%. That's probably holding silver up. Gold, silver is slightly lower. WTI 76.69 down 27. Natural gas 203 and change, unchanged bid. Bitcoin unchanged, a tad higher, 59.36, 360, and Ethereum is 25.12 down 16. Platinum, palladium are diverging the other way now. So forget that whole economic thing I mentioned. 984 and palladium down $4, and platinum is 935 down 2. Grains are all up. Soy, corn, wheat up 10, up 2, 1023, 384, 549 and change, respectively. Front page, long, slow goodbye to the US dollar standard. That is a story that we have mostly behind a paywall, and it is a write-up of a very well-written piece by James Grant. All of his pieces are well-written, but we thought this was particularly interesting, so we wrote our own coverage of it. The Interest Rate Observer, for those of you not familiar, an esteemed publication by a guy that I've been reading since 1988. If James is listening, 1988. I've been reading you longer than some of your readers have been alive. All right, the BRICS Summit is getting spicy. Well, it is. Gold, Goats, and Guns with Tom Luongo and Eric Young. That was a broadcast on the Chinese culture and where they are in their life cycle of buying gold. And it turns out they're not very far into it yet. Okay. First story, the main story, the FT, China's international use of renminbi surges to record highs. Okay. This is an excerpt from that and the main chart. We're going to reserve some commentary in the premium section, but we'll give you an idea of what's going on here. China's use of the renminbi in cross-border transactions has reached record highs this year as closer ties with Russia bolster Beijing's efforts to internationalize its currency and cut dependence on the dollar. See this year? We're going to discuss that. That's not causative. There's the chart. As China's outbound payments in dollars decrease, their outbound payments in renminbi increases. So, signaling a broader acceptance of renminbi for cross-border transactions. So they're doing stuff locally. You know, we're not paying you in dollars anymore. We're paying you in yuan or renminbi, however you say it. And they note that this is a new high. You could see the trend has been in place since 2010. The trend has actually stabilized from 220 over, and now it started accelerating in the middle of, well, right after the first quarter of 2022, right? So rising, big drop off. We'll figure out why later. Flattening since 220. And then steepening again, but volatile since 222. This is the internationalization of the yuan. You could see that they're using less and less dollars. Why is the dollar weaker, you may ask? That's a good question. The reason is because China isn't the only country that uses dollars. So every dollar they're not using is a dollar that they're selling, and that dollar gets orphaned, and then either the Fed has to scoop it up by raising rates or someone else has to buy the treasuries. So that's why the dollar remains strong against other G7 fiat. Continuing with the article. In July, 53% of China's inbound and outbound transactions used the Chinese currency, according to data from the State Administration of Foreign Exchange, also known as SAFE, up from about 40% for the same month in 2021. We add this note for everyone here. Consider this correlation. China cross-border use of renminbi increases coincidentally with global gold prices accelerating, going up since 2022. Okay, we're going to have more to say about that pointedly at the bottom with a very special chart that we put together just now. Let's go on to PCE. PCE day, PCE release, no surprise is a surprise. That's our comment. PCE is today. Markets are not focused on this at all and are instead looking at unemployment next Friday now as they feel the disinflation story is baked in. That picture is a graphic of the expectation of rate cuts going forward, hence its negative lowering of rates over time. Pretty aggressive. Bloomberg's consensus poll for PCE expects monthly core PCE unchanged at 0.2% month over month, which puts it at an annual core for them of 2.7% year over year. Okay, Bank of America, for example, they believe the headline will be 0.17, which is 2.6 year over year, and the core at 2.7 years. So there's really no big variations, very tight dispersion around the mean. Goldman, another example, says today the focus will be on core PCE and think the possibility of much of a meaningful surprise is low. Okay. Reminder to Wall Street, the definition of a surprise is you don't see it coming. Reminder to Main Street, when Wall Street tells everyone they don't see a likely surprise, what they're really saying is they're confident in their work, which can lead to complacency, which is how surprises happen. Always stay vigilant, but you don't have to panic. That's PCE. Data on deck, PCE, as I said. Well, it's Friday. Let's take a look at the charts before we go to the premium section. Let's take it to the daily. It's pretty significant stuff here, I got to tell you. I threw a couple posts out yesterday. This is looking more and more like an interventionist slam. We'll say when I say intervention, you think Bank of International Settlements or someone bigger than the bullion banks. This behavior here, I don't know who that buyer is. I suspect it's macro discretionary. I don't know who this buyer is. I suspect part of it is a bullion bank, but we're now looking at, remember on by lines? Here's the lines. Well, let's take out Michael's line here for a second. Here we are. Slam, range higher, slam, range higher, slam, range, already testing the highs. The duration of these pauses after the slams is decreasing. You know, it wasn't too long ago, those slams would lead to a 2-month decrease, a drop, not a sideways movement. So I think whoever is in this market might be running out of patience. And it would make sense considering that you're bumping up against the October 22nd BRICS meeting, as well as the U.S. election, which in my opinion won't really end until January 5th when the inauguration happens. So there could be someone out there losing patience who needs to buy. Needs to buy implies that it's someone who has a quota or a deadline. That could be a BRICS bank. It could be a BRICS player. Needs to buy could also mean someone who's short and getting uncomfortable. That could be a bank, a bullion bank, a hedge fund, who knows? But this isn't a top until we get a blow off. So even in the short term, you want to look for a spike before we blow off. I doubt this rolls sideways and then drops. I mean, it could, but I don't see much of that. Silver, silver's being used to buy gold still. And today you're getting a little bit of a break, but that's what's going on. Silver's in a range over these days. You see this? Silver's in a range. High, low, right? It's almost like a wedge. And gold's not. Gold's not in a range. Gold's trending. Someone is using silver to buy gold. So they're buying gold on silver weakness, and they're stomaching their silver shorts when it goes up, and other people are doing it, so it's staying that way. I want to look at oil for a second. Oil seems to be in a range, and it's in a range for a good reason. This is the old gold chart. If you're trading oil, you're trading wedges now. So you want to start looking at things like trend lines, but I'm focusing on the volume of shorts. And I think the market's going to stay in a range, but I am bullish over the next several years or so. However, going into sell season, if I'm a little bit worried about gold, I'm very worried about oil. I think whoever's left long oil on the macro side is going to throw in the towel. So I would not be surprised if between Labor Day and Halloween, oil really struggled. Who knows? That's it. Happy Friday. Again, auspicious day. We've got a new monthly close. Let's put that chart up for you. Let's put the gold chart up for the monthly so we can all take a look at it and hide those lines. That's pretty damn good, right? And that's not a new monthly all-time high by $1. That's going to attract more money. I can't believe it. But macro discretionary is going to buy this again after Labor Day. Now, they may be wrong to do that, but there's going to be people buying this again after Labor Day. It's crazy. I think seasonality may be repealed. I don't know. I mean, geez. I'd hate to be a bullion bank right now going into this time of year and not having any sellers. I really would hate to do it. All right, so stay with us. We're going to go through the premium section now. All right, folks, here we go. The FT article, which, by the way, we're going to have a quick comment on it. There's a comment. It's 4 bullet points. There's a chart overlaying the FT article with the gold chart, and there's excerpts from the FT article for premium subscribers, right? So there it is. It's in the negative, the charts, but it's the same article. Okay, so first thing I want you to notice about this chart, the path of the internationalization of the renminbi, I say it wrong, has been on chart since 2010. This is not new. This is not because of Russia, okay? It's not because of Russia. It's because they're internationalizing the yuan, okay? It hasn't accelerated because of Russia, although you can make the case. I don't believe it's accelerated because of Russia, although Russia is a factor. It's accelerated because more people are using it. It's accelerated because more people are accepting it. China's like, hey, we want to buy stuff. We don't want to use dollars anymore. Will you take these? Initially, no. Right? Brazil, no. Latin America, no. Now it's like, okay. Now why? There are 2 reasons for that. One reason is China has been diligently seeding the world with yuan. We'll loan you dollars. Pay us back in yuan, right? We'll loan you yuan. Swap it for dollars if you need dollars, okay? We'll buy your soybeans and we'll pay you in dollars, but we'll pay you in dollars for it. And then it's like, we'll buy your soybeans and we'll pay you when you want. We'll build your airport and we'll loan you yuan to pay the IMF back. Remember, didn't Argentina do that recently? And the IMF said, okay, I guess we'll take you on. That's how it works, right? They've been seeding, creating franchises, right? And creating demand for the yuan by offering supply. That's the right way to do it. Now, Russia is the example that everyone focuses on, but Russia's not, nobody trusts Russia. You think any of the BRICS countries trust Russia? Russia invaded a sovereign nation. They may not trust the US, but they trust China to protect them from Russia. Russia's the mad dog on the leash. Okay, so geopolitically, that's what's going on, right? China has been doing this for over a decade, and they've only recently stepped it up. Now, more pointedly, in 2016, this is a bragging point. 2016, I had the opportunity to meet someone who was a trader in wet barrels. That's what we used to call it, in physical oil. And we were talking about blockchain and what it could do for commodities, et cetera, et cetera. And he said, well, 2016, mind you, in Chicago, he said, Russia and China are doing, this is 2016, folks, that we read about in 2023. Russia and China are doing oil deals for yuan guaranteed by gold. What the hell does that mean? Well, back then, we kind of reverse engineered it. And he said it was over $1 billion. That was their test. And they cleared it in the Seychelles, which makes sense. So how would you do that? You would say, all right, China says, I want to buy oil. Russia says, pay us in dollars. China says, we want to pay you in renminbi. We want to pay you in yuan. Russia says, well, look, you guys are pretty cool, but no. China says, well, how about if we guarantee it in gold? And Russia's like, we like gold, but you can't guarantee your currency in gold unless you guarantee it for the world in gold. And China says, but we can have a contract. We're going to pay you in yuan. And in the oil contract, we could say something like, the yuan is redeemable in US dollar value of gold if you want. And essentially, in the contract, in the deal, you embed a put. We'll take the yuan back and give you the gold. And Russia says, hey, that's a great idea. How do we know you got the gold? And they're working together now. This is not adversarial. They're like, how do we make sure that you have the gold? Well, let's attach blockchain to it, right? Well, who's going to hold the gold? China's like, well, it's our gold until you want it, but we're going to put blockchain on it and earmark it for you, and it will stay in the Shanghai vault. That's how China does it. No gold leaves China. And at that time, right after that time, Russia started liberalizing its own banks to do business with China. So Russia started selling gold to China. Russia started storing gold in China, and the whole cross-pollination thing happened. And as a year or two went by, I'm like, this makes a lot of sense. So what is China doing? They're essentially not backing, but guaranteeing the yuan with gold. And it worked. And that was a test case. And that's what the BRICS are going to do. I could be wrong. I don't think I am. But as time went on and people said, you're crazy, you're nuts, I started making the comment that basically they're going to back the yuan with gold. And so it's a generalization, but that's the concept. It could be a hard backing. I completely doubt it will be a hard backing. They could do it, though, because gold doesn't leave China. It stays in China. It's not a free market. You can own gold in China, right? You're a Chinese citizen. I can own all the gold I want. You just can't leave China with the gold. They draw their fences here, and they're hard authoritarian fences. We draw our fences at the exchange. Sorry, you can't have the gold. Right? Everyone's got their fences. Now, coming back to the actual transaction. So China says to the rest of the BRICS, this is me talking, I'm not sure this. China says, hey, Russia and I did this thing. Why don't we do this thing? Hey, Saudis, we want to buy your oil in yuan. Saudis like, nah, we're not going to do that. Or maybe they will do it, but just a little bit. It's like, what if we put it in gold? You mean you can guarantee it in gold? Yeah, we'll keep the gold here. And the Saudis like, hey, that's a good idea. And so now the BRICS one by one start looking at it. And I recovered this in 2023, and I wrote an article on it. And as I was writing an article on it, Jeffries, Chris Wood wrote an article. Now, it's ironic that Chris Wood would say this so late in the game, but he said it. He said, there is a rumor, it's 2023, mind you, there is a rumor that China is doing deals for oil with yuan backed by gold. And I'm like, yep. And even the expert writer, Jan, wrote about it after reading my article. Now, 6 or 7 years have gone by since I heard it, studied it, did the math, studied everything, and it's happening. So Russia's doing it, the Saudis are doing it, everyone is doing it. So the BRICS are essentially, this is where the whole M bridge thing comes from. The BRICS are coming in there saying, all right, we're going to have this centralized, I mean, there's a lot of details that they haven't gotten done yet, right? But basically it's this, we're going to trade for other people's currency with guarantees of gold. And isn't that what the unit is? Look up Bancor. That's what Enbridge is. Enbridge is Bancor. Another conversation. So back to the main point. The world is getting more comfortable handling RMB because the world knows that if push came to shove, they could have a contract, a bilateral contract like Russia did, with the gold allocated to back the yuan. The BRICS platform is going to do the same thing. Now, there's a lot of impressive, difficult details to do here, and that's where the infighting comes in. That's why I said it's going to get spicy. But that's how it works. So if you want to go back to their chart, if you want to go back to this chart here, it's been going on since forever, right? And in 2016, 2017, it started to look, see this sell-off here? I know when this was. This was when the, I think it was when they were included in the SDR. China was included in the SDR, which means they had to use more dollars, et cetera, et cetera. They're impressing their interviewers. And then it started to go up again, right? So now here we are. And then, by the way, you may not have the eye sensitivity for this, but you have to look at this, right? Between, say, 2020 and 2022, even though there was a spike in there, the blue line is essentially a flat line. And during that time, everyone was like, COVID, COVID, COVID. They went to dollars. Everyone's like, we want dollars. We don't want your crappy currency. And that's what happened. And then Russia invades Ukraine, and people start accepting yuan. Now, obviously, that's Russia. This is Russia upticking here, right? But this isn't Russia. There's volatile here, but this is other countries accepting it. Okay, so why am I getting through all this? You can read the whole article, but gold's appreciation is correlated with broader adoption of the RMB, which correlates with something we've been saying since 2017, that China is in the process of backing its currency with gold for special trade partners by embedding optionality in the RMB. Special trade partners, you, and you, the BRICS, we're going to guarantee your shit with gold. We're going to do partial backing. It's not for the people, and that's where central bank digital currency comes in. The people get digital shit. All right. The dollar used cross-border by China is also decreasing. That's this line here, right? Right. But that is not hurting the US dollar because the US dollar is the US is vacuuming dollars up as they become orphaned, right? So China says, we're not buying, so we got dollars, what are we going to do with them? Treasuries, right? We're going to sell our treasuries. The US says, raise the rates, buy the dollars, right? Or they get other countries to buy treasuries. The whole thing taken together explains why gold is ignoring the US dollar strength. The dollar is strong because the Fed is buying them back. The gold is strong because it's backing the yuan. And that's why your correlations are the way they are now. And so this is actually pretty ugly, but you get the point here. Gold's been going up since 2010, and the yuan use has been going up since 2010, and the dollar use has been going down since 2010. Look, the second largest economy in the world is using less dollars. Duh, right? Anyway, so that's the chart. And there's the article. That's it. That's the whole enchilada on why gold is going to be a backer or a guarantor in special situations or more with China. Footnote, if you're in the West and you want to do business with China, they're going to accept dollars. They're also going to accept yuan. and they're going to say, we'll back the yuan with gold. And so now if you're a small Eastern European country, you're like, well, dollars or yuan backed with gold. Now, if you trust China, you go with yuan backed with gold. I don't trust China, you say. Well, do you trust Russia? Maybe you do. Say, all right, well, Russia and China have a good deal. To default on me would be to show Russia. See, China can't screw a smaller country because if they do, they breach the trust with Russia. It's like saying, we won't do it to you. We'll only do it to small countries. Now, if your country like, say, Estonia, who has no love for Russia, that's my understanding. You're like, we'll stay with dollars. But you may cut a deal with the U.S. saying, we want dollars, but can you give us a carve out with gold on the side? It all becomes a big negotiation now. The dollar is not in control anymore. There's another player at the table. Have a great weekend.